Good morning, friends. This is time for the trade plan on for 16th of July 2020. Now, yesterday the markets gave you sharp moves in both directions, and as you can see, this is not a market for people who are lazy, people who think that market will come to their homes and give them a check. This market moves and moves sharply and briskly and changes from day to day. So basically, we were at 10,700. This morning, again, SGX is showing 10,680. So we are just moving in that sort of band. So, two kinds of people make money. One are people who are selling options, but selling of options is really shaking you up because the market moves at 200 points in each direction. And the other sort of people are the ones who can catch boundaries and take the other side. Yesterday was easy because anybody who knows a little bit of or has a little bit of experience would have understood that this RIL story cannot continue for a long time. And with yesterday's AGM, the immediate story on RIL has probably ended. So it was supposed to fall like the way it did. Now, possibly RIL can come off a bit more, closer to 1740, 1750, and from there, positions are rebuilt. Nothing wrong long term. But stocks, when they get overextended, even the best stock will face profit booking. Now, what is the plan for the day? See, I am still more keen on trying to go long, but at key levels. So let's see, uh, what kind of levels I am interested in going long at. First, let's look at the S&P 500 chart. Again, yesterday's bar is a positive bar. Yes, we could not make further gains post the open, but there is nothing wrong here. Until S&P 500 is in good shape, we cannot fall in any sort of sustainable manner. We may have some extra fall because of RIL still falling, but I think pretty much the lower end of the range of about 10, 550, 600 is set in stone. Now, in terms of pivots, let's see what sort of levels we are getting on the pivot. We have levels of about 10,681 as your pivot. So basically, we are opening at the pivot. And on the downside, we have support at 10,500, 10,564. And on the upside, you have resistance at 10,692 to about 10,756. On the bank nifty, we have support at 20,830 to about 21,030 and 20 resistance at 21,430 to 21,630. So basically, the market is doing a range, and we will see that range in our charts. So This is the Nifty chart. Now, the sort of range we are developing here, basically is this. So you have stuff from a very clear range on the Nifty, and the idea should be to trade the either level of the range. So the lower end is about 10,570, upper end is about 10,830 thereabouts. Bank Nifty, while it gave up yesterday, but again, very ranging style market. I think the range should continue. Today's expiry. Expiry day moves. First you go in one direction, then you go in another direction, and finally you 70% of the time you close somewhere in the middle of that range. So similar action should be expected. I would be interested in buying any sort of decline that happens. Let me show you what kind of decline I want to buy. A, I want to buy a decline at this lower end of the range, which is about 21, 240, 300. If assuming we open above this 20-day moving average, any decline towards the 20 should be used to buy. Okay. Again, let's look at the Nifty chart. We are going to open about somewhere here. So if we get a decline back into yesterday's low, I want to buy that. And I have no problem in even carry because global markets are still strong. So you have to play the range today. Do not try to play directional. Okay. So that is the pure instruction you will get. Positional players on Reliance should use the decline today to build long positions. Now, yesterday I was fairly bullish on Bank Nifty that it has corrected quite a bit. I think I remain bullish as long as it stays above 21,000. On the Nifty, I stay bullish as long as that stays above 20, sorry, 10, 550. Meanwhile, I think technology stocks are doing extremely well. So that seems to be the outperforming space. Try to do your intraday trades in the technology space. And while they have run up quite a bit, but on declines, they are still decent buys. Private banks, you can continue to build positions because sooner or later, I think the bank nifty will start to perform on the upside. Yesterday's decline mainly was a Reliance decline, and the rest of the market just capitulated because of Reliance. So I would think we are making a higher base from the data of FIIs, etc. They have also become a bit more positive because people can realize that there isn't great life below 10,550. That is your line in the sand. I think at some point we will cross 10, 830, and that will then allow you to move forward. But buy at certain key spots which I have mentioned in this video. Don't buy randomly. The market at any time can move against you 100 to 150 points. So you need some sort of an intraday exhaustion, and those exhaustions, how do you identify them with those N, M, and N, M, and W patterns that I had put up a video about. So this is a very fast moving market, extremely tricky. Don't get your Edward and Maggie into the picture because even they would have found it extremely difficult. The market is turning on a dime and turns extremely sharply. If you are stuck on the other side, get out. Okay. From yesterday's high of 10,830, you fell to 10,580 thereabouts. 250 points move in a day are quite common. So adjust your volume accordingly, do proper money management. Otherwise, this market will kill you. So that should be it for the day. Uh, Take care, trade well, and please consult your financial advisor.